All right, guys, we're back for the third and final part in the Forex trend trading smart money strategy. And we're going to be looking at entries. The first video we've talked about, again, the overall, how the market tends to be driven overall, tends to be driven in cycles of three. That gives you overall perspective. And we in the second video, we talked about how before they start the second move or the third move or even really the first move, you often see a manipulation, whether that's in the form of a stop run or a bottoming or topping formation. And so that's what we're going to talk about today. We're going to talk a little bit more about the timing of when an entry is taken. We're going to go back to something that we were talking about in the room. It looks like we had a first push up here. This goes back to March 15th. And so one thing we've said is that we'll see the accumulation through Asia as that tends to happen, and then we want to see the market break below that Asian low and form either a stop run or give us a nice bottoming formation. Now, bottoming or topping formation, that's what we term it as. Uh, you know, essentially when it really boils down to it, you can call it whatever you want. It's a double top, double bottom, ABC pattern, 1-2-3 pattern. You hear people call it M and W pattern. Whatever word you want to use for it, it all talks about the exact same thing. All talks about a very common pattern. Now we're going to mention some patterns or that pattern. Again, whatever you want to term it is fine. And we're also going to mention some things about candles. One thing that we want to stress, and why Chad and I don't mention, really talk about the candles too much as far as in the context of the candle. We talk about it in relation to the smart money strategy, how they tend to trend the price. If we saw this bottoming formation here, and we saw it during the Asian session, it would mean nothing to us. But given the fact that we had a first push up, we were expecting the second push up, and given the fact here that it was breaking below the Asian lows, as again what we look for, the manipulation tends to generally one strong time, I guess I'll say, for the manipulation to happen is outside of Asia at the beginning of the European London session. Again, why do you think there's the name the Frankie fake out? It's because it's been around forever. They tend to fake out at the Frankie Open, which is 2 a.m. Eastern. And while it's not perfect, it's never perfect, exactly at 2 a.m. Sometimes it will be, but generally it's not, exactly at 2 a.m. It ranges between 1:30 and 3, 1:30 and 4 roughly. But you're looking for that manipulation in that time. And if you've seen a first push up, you're looking for the second push up. Again, what goes back to the first video. So then we look for the manipulation like we talked about in the second video. Well, what's giving you the signal that, okay, that manipulation's over and this is the time to take the entry? Well, what we use is, again, once that bottoming formation is complete and then the candles confirm it's working to the upside, you can use any type of generic candle pattern that you want to use. Again, candle patterns in relation to any other time of the day or at any other point without everything else confirming it. Again, what cycle we're in, whether we're seeing manipulation or not, without context, just like a topping or bottoming formation, it means nothing. And so this is again where we can use things we talk about, like the video here on a confirmation entry. You can use whether it's a hammer or a shooting star, giving you the final indication that the bottoming formation is over. Here at these lows, we had it come down, create a nice doji on that second push down before working its way back to the upside. Again, as we move forward, what do we see? We see the market come down. Again, we saw a second push up, so we're expecting the third push. We see it work below Asia and see a longer drawn out nice bottoming formation there. Again, not a perfect bottoming formation. You like to see it a little bit closer together, but nonetheless, still giving us that bottoming formation and using either the candles engulfing back to the upside to really signal that final part of the entry. All right, so we've gone over to the pound, and we're going to look at here's another good example here. Again, we've seen saw a first push down. We entered that Asian accumulation as very typical of the Asian market. And then what do we see? Out of Asia, we see the market. Let me zoom in a bit. We see the market do what? Well, it manipulates above the Asian session. So keeping things in context, what would we be looking for? If we've seen a first push down, we're going to say, okay, well, we're only expecting the second move to the downside. If we're only expecting a second move to the downside, then we're going to look for either a one candle or a couple candle stop run above that high, or a manipulation move above that high, or we're going to look for the market to work above that high and then complete a topping formation. And that's exactly what we got here. Again, if we're seeing the first push down, we're expecting the second push down, so we're only going to look for the market to come up, create a topping formation before the move down, or again, a stop run before the move down. Doesn't matter. It could be a single candle stop run, could be a multi-candle stop run, but using the key there, that the fact that we've identified the cycle. If we've identified the cycle, then we're only looking for manipulation to the upside. Now, again, how do you know that that topping formation is going to hold? How do you know it's not just going to continue to run off? And that's where the candles come into play. That's where the candle can be the very last specific thing for an entry, and people have different preferences on this. This isn't something I can say, okay, use this exact candle formation or use this formation. What I can say is give you the general over idea. Again, if we've seen the first push down, we're expecting a second push down. So we're either going to look for a stop run or a topping formation. Comes up, gives a topping formation, and then eventually almost engulfs back down. But eventually the candles really start to confirm it to the downside. And that's where you can use on that second push up, or the second, again, the second push up that completes the topping formation. That's where you can start to use your basic candle patterns to signal that that is pushing up and it's starting to get rejected again. Your evening star in that case, or a shooting star formation, engulfing back to the downside, whatever candle formation you want to use that you're comfortable with using, because again, the candle formation is such a small part of, again, identifying the entry, because everything else has already given us not only direction, the topping formation has given us the timing, and the candles are just very simply giving us one more indicator as to, hey, this is the timing of the entry. Without the context of how smart money tends to trade, without the context of, okay, they've accumulated during Asia, they're manipulating the price up, candles mean nothing. You're going to see, a question I always like to ask people is, what success have you had with just candle patterns? And that's a question only you can answer. And if you answer the question like 99% of other people, you'll understand that candle formations without context in and around them tend to result in losing trades. You'll go through stretches where they work out well, and you'll go through stretches where you have a stretch of losing trades. Without the context of what smart money's doing, the candle patterns don't mean anything. It's one of the reasons that Chad and I really try not to mention candle patterns, because people will get caught up in the belief that what we do revolves around candle patterns, or it revolves around topping formation or bottoming formation, when it really doesn't. That's one tiny key once we've already identified what smart money is doing and what direction they're going to drive the price. So you got to ask, why would they create a topping formation? Why do you see the topping formation? You can call it what you want, ABC pattern 1 2 3, double top, double bottom, M or W formation, whatever you want to call it is fine, because it illustrates the same point. It illustrates the point that they're coming up for that second test. Why would they do that? Well, if they want to short the market, how do they short the market? They have to induce buying. As they induce the buying, they run the price up once, come back down, set a higher low. What's everybody doing? Well, this thing's going to work to the upside. Everybody begins to buy. As they begin to buy and pile on, smart money is all the more happy to sell into that buying pressure. That's often why you see the second retest. It allows them another opportunity, another manipulation move to, in this case, sell into the buying pressure. Now, next we're going to talk about just single candle stop runs, and this is where, again, you got to ask, if somebody's skeptical about the fact that smart money induces selling to create buying pressure, or induces buying to be able to sell into that buying pressure, you got to ask yourself, why do you see the market creep beyond a high or a low almost every time it starts to move? I mean, even here, what do we see? On that topping formation, not only is a topping formation, but gives a stop run. What do you see at the bottom? Well, we have a clear double bottom, takes out those lows before running to the upside. We'll zoom into zoom into the pound here, and we'll go into a trade that was again today. This is again in context. We've already seen the third push up in the pound. Actually, let me go to another pair here real quick. Sorry about this, guys. We'll go to the pound yen, and this is a trade that is in the recent trades. If you guys want to check it out, it is in the recent trades. Was a trade that we took, and I did get it on recording. But when we go to the hourly chart, when we go into the 15 minute, we'll illustrate it more clearly. But we saw what was the third and final push to the downside. and we had a clear established low. So in context, after the third and final push, we saw a larger bottoming formation. And at the end of that bottoming formation, created a stop run. Again, one candle stop run. Why do they take out the lows? If they don't, if you're skeptical of the fact that smart money doesn't need supply to meet their demand, you got to ask yourself, why is there a stop run almost every single time the market turns? So going back to, again, the pound today, this is again a trade that Chad was taking in the room, or he was mentioning he was taking in the room. We had already seen the third and final push up in the pound. If that's the case, the only thing we're going to be looking for is a manipulation or a stop run up or a topping formation up for them to move the price down. That was exactly what we had here, completed again in the context of what smart money is doing. Because we've already seen 3 cycles to the upside, more than likely they were going to reverse the price, at least short term. And what did we see? Well, we saw them work above the previous day's high, complete the topping formation before slamming the price down. Before they drive the price back up, what do? Again, they take out the lows before driving the price back to the upside. What do they do before they create the third push up? They come down, they take out the lows before driving the price back up. Again, using those candle formations, in this case using the fact that you're seeing wicks to the downside, a morning star candle formation there, or it's engulfing back to the upside, using once you've identified what smart money is doing, you know that you've had your second push up, so you're going to wait for the Asia to accumulate. You're going to look for them to take out the lows out of the Asian session, and then use the candles to signal that, okay, this is the start of the third push up. Again, we go back down to the day before that. What do you see happen? Well, you see the lows there come back down, and what do? They take out the lows before driving the price back to the upside. And you see a nice little doji formation there before they drive the price back to the upside. Very common pattern here. Again, before they drive the price down, what do we see? Well, let's go over to the euro. We had a good example of this. This is actually another live trade I posted in the recent trades. We'll go out to the hourly chart, and what do we see? This is again a nice trade here. Mentioned in the forum. We see them with a one candle take out the highs, completely get rejected, using that candle formation to signal that that move was more than likely a stop run before they drove the price back to the downside. What do we see here? Again, using one candle stop runs, this is what we're talking about here. They take out the lows before driving the price back to the upside. We can go all day here, guys. Come back to this price here. Let me move this up a bit. And you can see they don't take it out by much, but they take it out by, let's see here, 34. Take it out by 3 or 4 pips. Take out the lows before driving the price back up. Come over here. What do? Take out the highs before driving the price down. And again, we could go all day before they started this first move down. We zoom into a 15-minute chart. And again, what do before they start that big move to the downside? Take out the highs of the Asian session, reject it back down. Again, there's that candle formation giving you the signal that, okay, they've hit the stops on the stop run, and now they're reversing the price, hence the term stop run reversal. If you haven't seen the video on the stop run reversal, go back, check that out. It's from a couple years back. I believe it was in March of 2010. If you're searching for it, you'll know which one it is once you see a video from then. You'll see the stop run reversal from that point. Illustrates this point even more clearly. So again, we can use it as a tool for picking the end of these runs. Maybe we've seen the third and final push, and it's giving us a bottoming formation or a stop run at the end of that push. Maybe we've seen a first push down. We've seen Asia accumulate. Now we're going to look for the stop run up before they drive it down again. Go out, look at some more one candle stop runs here, guys. Again, why at the end of this move? Large move to the upside. Why do they take out the highs before reversing it back down again? Because they have to have liquidity. If they want to close out their position, they've obviously been long. If they want to close out that position, what do they have to do? If they're long, they have to induce selling. Or excuse me, if they're long, how do they close that price out? They have to sell it back to the market, right? So if they want to sell their position back to the market, they have to induce buying. How do they do that? They drive the price through the highs, induce buying, sell into that buying pressure, thus closing out their position. That's why you're always going to see a stop run. That's why it's one of the most consistent patterns in the market, and why, again, in my belief, for my own trading, one of the most profitable patterns in the market, even on a short-term basis. Again, here, taking out a clear major high before driving the price back down. And again, we'll go into manipulation here. Once the cycle has started to the upside, something we've already talked about, they take out the lows before driving the price up, come up again. Asian session, they take out the lows before driving the price back up. Just such a common pattern. What we can use to say that that move is over is a common candle pattern, whatever you're comfortable with as far as a common candle pattern. Because it's such a small part of the strategy, we're not picky about it. Again, the manipulation and how to identify that's the key part. Once you've done that, you know which side they're going to manipulate to, or more than likely. And then the candle formation, or that bottoming formation, is going to give you the indication that, okay, the manipulation's over. It's time for that final push up, either second push, third push, whatever it may be. That's what's going to give you the indication. So hopefully this video makes sense, guys. Hopefully, we've explained it in a way that is beneficial in your own trading. Again, look through the first video. It's all about context. If you're trying to trade bottoming and topping formations or candle patterns without the overall perspective and view, you're going to get burned. If you're looking to trade, again, whatever you want to call it, 1, 2, 3 ABC pattern, double top, double bottom, you're going to see it 100 times through a given day. If you're trading it in the context of where you're at in the overall cycle, or trading it with a view to the manipulation in mind, that's when it becomes useful. That's when it becomes a tool that can produce something better than 50-50. That becomes a tool where, again, as the individual becomes better, they can make use out of that. And hopefully this video, again, hopefully this video series has been useful, and you guys can use this again in your own trading, and hopefully profit from the things taught here. So if you have any questions, as always, feel free to write below this video in a comment, or you can contact us through the contact form on the site. We'll be more than happy to get back with you and answer any questions that you guys might have. All right, until the next one, happy trading.